The following content is a technical analysis on Meta Platforms Incorporated, a company of the technology sector and internet content and information here off the Daily Novel. And I believe the company has found itself in a rather delicate situation, both from a meticulous technical analysis standpoint and a fundamental perspective. The company is currently experiencing a massive wave of layoffs, with tens of thousands of jobs being eliminated by numerous headline after headline. Zuckerberg himself has acknowledged that further reductions in workforce will be implemented in select cases throughout the remainder of the year. This has a mixed sense of relief among some of the current employees who still retain their positions. They are, for one, experiencing a decline in productivity and a diminished morale. And what further adds to the complexity of the situation is just the stock price. Right off the November lows, I mean, it has surged now over 100% this year. Right off the November lows, you're looking at 172% in gains. And this notable surge prompts me to harbor reservations about the true nature of the events unfolding within the organization. Most notably, the metaverse, which was once touted as a promising concept, is now undergoing a huge process of disintegration. Meta is grappling also with a substantial blow to its reputation, as the European Union has levied a record-breaking fine, the largest record-breaking fine of any company, at $1.3 billion due to its violations of the general protection regulation of the privacy data, now going underneath the European Union and an organization. Of course, Meta has appealed that action, but again, just another critical juncture. $1.3 billion isn't gonna absolutely destroy the company, but it will definitely at least have some sort of pullback in some of the fundamental news that will continue to build on that front end. But in summary, you have a company that currently finds itself, again, I believe, at a critical juncture where the convergence of significant job cuts, a massive stock surge, a faltering metaverse, and a substantial regulatory penalty has cast a shadow, in my opinion, of uncertainty over the organization's internal workings here. And here we are at a key juncture right on the charts here, whereas we have a nice, clean, rising wedge pattern with a nice big divergent high, negative and bearish divergences, RSI divergence, moving average convergence, and the oscillator, and all three momentum indicators with bearish and negative divergences that have continued to construct and establish themselves going back since February at the beginning of this year. Whereas we have the oscillator histogram already pre-printing nice solid red candle closes below here, below the zero line threshold. So again, just momentum beginning to falter down and slow down on these key technical momentum indicators. And what I'd like to see is a nice clean break, solid daily candle close below this primary uptrend line here off the November reactionary lows. Whereas we have a dual gap resistance at that 236.07. Price support coincides with the 618 fibs retracement. And I believe if that goes, it'll expel a sell signal, in my opinion, and maybe a move down to its 50 exponential 50-day moving average for a 9.12% crash down to 212.70 price support, which will coincide with the 50% fibs retracement for a 12.4% crash down to 197.74 for an 18% crash. And if things get a little bit more, a little worse there on a complete backfill of the gap there, right at 382 fibs retracement for a 25% crash, call it 179.76 price support there. At minimum pullback, at least minimum on a backfill of this first gap for a double-digit crash. Anything's possible. Again, I want to see that. I want to see that trend line go. I want to see a nice daily solid candle close below to issue that sell signal before taking a sizable position. Bull traders, long traders, they want to defend this primary uptrend line, and most importantly, they want to defend the top of this gap at 618 fibs retracement at all costs. Coincides with that nice steep volume profile zone. Again, they want to defend this key level and March continue that uptrend to the upside gunning for a complete backfill of the gap up there to 326.26 price support at the 100% fibs retracement there, which is another 31% in gains. And then ultimately what they will do is burn off these negative and or bearish divergences entirely for a next move to the upside. I will be waiting patiently for a breakdown below, and we'll see if we get it. Only time will tell. This is a longer term daily interval short swing setup